You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back once again for TWIFO. This Week in Futures Options, the program where the name pretty much says it all. We break down the week that was and indeed still is on the futures options side of the fence. We're going to talk about this week. I guess you got to tune in every week to find out. Hope you had a great 2023. This is our first episode for 2024. So a lot to unpack, a lot to look forward to here. My name, of course, Mark Longo from the THE optionsinsider.com, as well as from the network upon which so many of you were mainlining last year, 2023. Once again, our biggest year ever. Every year, new record. We thank all you folks out there for continuing to drive up my bandwidth bills. We appreciate it from all of you. Remember, if you like what you hear, this show, any other show we do on the network, throw a rating, a star, a like, a comment, whatever platform you get it on. All of that in aggregate at the end of the day does help new people discover the show. And then, of course, if you want to go above and beyond, and who doesn't, you want to kick off your new year, maybe turning your options trading up to 11. Maybe you want to join a great community of great people out there who are talking about options and listening to great shows. Maybe you just want to get exclusive option shows like pro Q&As and indeed options oddities and all sorts of fun. Maybe you want to win fabulous prizes like our pro trade. Only one place to go for all that fun. theoptionsinsider.com/pro. Welcome to all the new folks who joined us towards the tail end of last year. And indeed, welcome to, or I should say congratulations, to Roddy, the winner of our final Pro Trading Crate for the year. You want to win the January Pro Trading Crate? Got to put your name in the hat. theoptionsinsider.com/pro is the place to go for all that. Speaking of fun, let's see who's joining us today in the old CME Group hot seat. You know, it wouldn't be our show new year if we didn't welcome back on our old buddy to kick things off, Mr. Dan Gramza from Gramza Capital Management. Dan, welcome back to TWIFO, sir, for the first show of the new year.
Well, thank you very much, Mark. I'm looking forward to exploring these markets with you. As always, it's a lot of fun and a lot going on. And Happy New Year to you and everyone listening.
Happy New Year to you as well. How was the Gramza family New Year, sir? Was it a happy one?
It was a happy one, just a nice, quiet, actually, New Year's, and it was wonderful. We had a great meal and just great to be together.
And it's great to be together with all of our listeners as well. So let's kick it off, Dan, a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
Welcome to the Movers and Shakers Report. By the way, listeners, if I sound a little bit different, if you're listening live and you're saying, where's all that cool transitional stuff? We're coming at you from the Southern studio. I'll be down here for another week or so. So if I sound a little bit different, that is why, listeners. But you know what? Nothing's going to stop us from breaking down some great movers and shakers. We'll get to all the stuff that's going on right now in a second, Dan. But as I mentioned at the top of the show there, this is our first episode, our first TWIFO for the new year. It's also the first time we chatted with you since all the way back in November 2nd. So 2 months, Dan, since we've had a chance to chat with you. So let's start with a little bit of looking back. When you look back at the mad, insane, the tumultuous year that was 2023, Dan, from a futures options perspective, what really stands out to you?
Well, Mark, we had a lot of markets that gave us some movement that was interesting. I think the equity indexes, if you look at all those, we really saw a lot of movement there that made it interesting. We're still seeing that as well. The Russell, I think, is a good example of a market that kind of follows the other indices. It's that small to mid cap stocks that we're looking at there. We're looking at an index that's also sensitive to these interest rates more so than the other large cap indexes. So it's unique in that regard. I found that interesting. The dollar kind of all over the map. And right now we're seeing if the interest rates stay where they are, we're looking for some upward pressure on the dollar, so weakness in the currencies, interest rates. What I find interesting this past year, and I guess it's not new, Mark, but stock markets in general are forward thinking. They're always showing their expectation. And that's kind of where we are now. We're seeing that continuing. What has the Fed done? What should the Fed do? And we're seeing the market responding to some of those expectations. And I look for that to continue throughout this year as well. If we look at interest rate markets in terms of price action that we've seen, I think they've been orderly based upon what we're seeing with the stock market. Something I always think about too, and it doesn't always happen this way, but when you and I see the stock market indices going down, you typically look for the prices in the interest rate markets to go up because that money that's coming out of the stock market, it goes someplace. And interest rates is one of the places it goes. The other place it can go to are the metals, so gold and silver. It goes to energy, crude and nat gas as general. And we'll see it in other commodities, even like the ag markets will absorb some of that capital that's coming out of the stock market. So when I look at this past year, I think it was robust. It was very interesting. I think it was stronger than a lot of people expected. Remember, if you and I were talking at the beginning of last year, the thing that was constantly floating out there is that 2023 would be the year of a recession. That sensitivity was incredibly high. That was the expectation of the market. And gosh, look at what you and I saw there through this past year. We saw labor markets and we saw markets that were somewhat resilient. We didn't see earnings falling apart. And we saw the Fed doing some things that were encouraging. And we're seeing that also beginning here in 2024. So it'll be interesting. I think the Fed is doing what they should be doing right now. I think the comments they came out with on the FOMC minutes was right on target. The market is saying, doggone it, lower those interest rates, stimulate the marketplace. And, the thing about it, Mark, all through last year, what did you and I hear all the time? The Fed's target for for inflation, 2%.
Yep, we did a poll even on it with our audience. We asked them if that was the right number, if they needed to change it, and a lot of our audience thought it was the Goldilocks number. They liked it.
Well, thank you for saying that, because that's fascinating to me. Because if you and I go around the world, if we look at Europe, look at the ECB, look at the UK, look at Asia, look at Japan, Australia, our friends in Canada, if you look at all these countries, what number did they use for inflation? 2%. Why? Is that a magic number? Does that mean at 2% we have full employment and we have low inflation? Is that what it means? And what fascinates me about that, there is no answer to that, by the way, I don't think. It's a number that everybody feels, central bank point of view, it's okay. That seems to be okay for the economy. And your survey kind of reinforces that. So I think that's interesting. The challenge as we go into 2024, and we had it throughout 2023, is how much does it cost to get to 2%? If the Fed now, because they said they could, which they should say this, we could increase interest rates. And if they do, does that knock us into a recession? To get to the magic 2%, is that going to hurt us? Should we be at 2.5%? Should we actually be at 3%? Look at our employment situation, our economy overall. Is 3% the right number? And that's the challenge. Nobody knows what the right number is, including the Fed. They need a sense of direction, and that 2% globally seems like an acceptable number. So I think last year was incredibly interesting in terms of how our markets responded to the expectation of a recession and to the action from the Fed. And, I think that's going to continue with us in 2024.
That's true. When this time last year, when we had people coming in and we were polling people's sentiment of all of our different guests and co-hosts on the network, I don't think anyone had the AI boom carrying us to new levels. Most people were talking about recession and the benefits of cash this time a year ago, Dan, right? It's been fascinating to watch. I mean, if you had told people all the things that would happen this year, and yet the markets would still end up strong on the year, vol would be down, a lot of people would be surprised. And it's a fascinating market we find ourselves in. Speaking of that market, Dan, let's break down a little bit now with a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers. You know what this is by now, unless you're one of our many new listeners, in which case, welcome. This is the portion of the show where we break down what's lighting it up, typically for the week. But Dan, because you're coming on, it's because our first episode of the year, we're going to move those goalposts a little bit. We're going to go all the way out to the top 10. We're going to expand it from a top 5, Dan. Going to do the top 10 movers and shakers for the year of 2023. How's that sound, Dan?
Ooh, that sounds really interesting.
Would you care to hazard any guesses of what will make it in either side, the top 10 light side or dark side? Any names you want to throw out there before I dive in, sir?
Well, if you think about where we had some volatility, energy markets was what area that I think was interesting. Our stock indexes were interesting too, if you look at how they've unfolded. Um, no, I guess I'd pick those two. In metals, we did have some volatility for a while in the metals.
All
So
good
maybe,
guesses, Dan. So tell you what, I'll let you guess. What should we do first? The dark side or the light side? Top 10 for the year of 2023.
something, since we're starting out the year, let's go to the light side.
Yeah, especially with these equity markets looking a little bit red to kick off the year. We'll get a little bit of green. Everyone's used to green now, Dan. We've been nothing but rallying for the better part of the last month, so they can't handle any red. So let's give them some green to kick off the year as well. All right, listeners, here we go. Looking back on the wild year that was 2023, here's your top 10 movers and shakers. Starting off to the light side, number 10, listeners. Dan guessed metals and gold coming in at number 10, up 10.36%. Again, you can probably, given all the factors we saw at the outset of the year, maybe have guessed that it might be a decent year for some flight to quality assets like gold. 10%, not a huge banger, but a decent enough move to make number 10 on our top 10 list. Dan also guessed some equities, and spoiler alert, we got a few of them on our light side list this year, listeners. Number 9, we'll start with the oft overlooked S&P Mid Cap 400, up 10.63%. So locking down the number 9 spot for the year. Number 8, our old friend, the Russell 2000. Man, we could do several shows, Dan, on just the saga that was Russell 2000 last year. The Russell 2000, it was up, it was down, it was all over the place, doing its own thing half the time, moving completely independent of the other major indices. It ended up the year, listeners, up 10.87%. So not a bad year by any stretch. Maybe not as robust as some of the other indices out there, but hey, not a bad year by any stretch of the imagination. Number 7, again, keeping it in the equities, we have the Dow up 13.3%. Number 6, our old friend, again, keeping it in the equities, the S&P 500, Dan, up 22.61%. So again, if I had told you these, Dan, a year ago, you would have thought I was a crazy person. You said there's no way the S&P is up 22% in a year when we're cutting rates aggressively and we're looking at a recession. Nobody had this on their bingo card. So fascinating stuff there. Number 5, now we're getting into the top 5, listeners. Number 5, keeping it in the equities, the consumer discretionary sector of the S&P 500, up 14.2%. So again, showing you where some of these big gains were coming from. Number 4, keeping it in the sectors, it's the communications sector of the S&P 500, up 45.61%. Everyone talks tech, everyone talks AI. No one's talking communications, up 45%. Number 3, this is the one probably a lot of you could guess, the tech sector of the S&P 500, up 50.08%. Again, no surprise that right behind it, or right above it, I should say, we have the NASDAQ 100 coming in at 50.11%. So again, the tech sector lifting all boats, NASDAQ moving the exact same percentage. A lot of love for tech out there. Magnificent 7 carrying NASDAQ to a, not quite a record year, but pretty darn close. And then we have the number 1, Dan. This one seemed like it was kind of languishing for most of the year, and then it just had a rip-roaring Q4. What am I talking about, listeners? This is Bitcoin, up 164.78% on the year. My goodness, Dan. So, maybe all things Bitcoin and crypto are back on the menu, Dan. Any surprises there, Dan, as I broke down that top 10 for you?
Well, let's start with the last one, that Bitcoin. It had some rough bumps with FTX and some other companies that have gone out of business or done some bad things that really took some of the steam out of Bitcoin or out of cryptos in general. I think people became more apprehensive about that group. And, what we're seeing now is that expectation returning to that marketplace. And, Mark, I think it's going to be very interesting to see if indeed this is the year that we get an ETF on crypto.
Heck, we might know that
Bitcoin
tomorrow, or we might know that certainly by the next time you and I chat, Dan, on this show. We probably will have an insight one way or the other of which way that is going, which is also fascinating. But as again, this is another category, Dan. If I had told you exactly a year ago on the network, on the show, we were, as you mentioned, still languishing in the post-FTX debacle in the crypto space. All of the big crypto assets, not just Bitcoin, but ETH, Solana, they were all in the toilet. It looked like a terrible time for crypto. If I had told you it'd be up 165% almost, again, you probably would have thought I was a crazy person, but that's the kind of year we had, Dan. It was a year for crazy people.
Well, I got to tell you, I wouldn't have been the first one to say, I bet you're right on that one, Mark. Because it's 50-50. You figure what fascinates me actually about the crypto is that it's a market that's moving on expectation. It's perception. It's not like we could say, well, if it's 164%, that means we got this happening. There's a physical aspect to this product. We don't have that. It's a market moving on perception. And to some extent, we have that with gold. Gold, the value of gold, is it really supply and demand? To some extent it is, if you look at central bank action that we've seen, which we could talk about. But Bitcoin is an example of a market that doesn't have an underlying. And so it's fascinating to me. It's a 50-50 market. And what's also fascinating, although I'm not expecting it per se, but, next time you and I are together at the end of 2024, we could say, who would have thought Bitcoin could have been down 170%? Right.
It could be down that next week if they don't get this ETF, right? This thing's been on the rampage of late. But yeah, this is just the top 10 here. Again, I probably could have foreseen this move for gold, others here. But if anyone had come on my network a year ago, Dan, and told me they were predicting 50% upside for the NASDAQ and 165% for Bitcoin, I probably would have laughed them out of the room. And hey, I guess that would have been on me, right? But
I've been there with you.
Yeah, then I would have called him back this year, back, hey, you were kind of right. Why don't you come back on? All right, let's, after discreetly uninviting them for the rest of the year. All right, let's keep rolling. Let's go out to the dark side now, listeners. This is what you're really tuning in for, the pain. What bleeding red did we see? Because the narrative last year was all upside, upside, upside. But we all know outside of the Magnificent Seven and let's say crypto and a few others, there were some dark moments for a lot of names out there last year. Let's break down some of those now, shall we? Number 10, going out to the ags, starting in the ags, Dan, but this time in dairy. I didn't let you guess. Let me let you guess. You guessed energy. Before any other names you want to throw out for the dark side this year, Dan?
Well, our eggs have had the meat, I think, is one area that has really had some screaming volatility. And the egg complex, you started with that, but the eggs themselves have really had an upside down kind of year from the point of view of, now these are markets that are fundamentally driven. Along with the expectation. So we've had some challenges. If you look at where we are, is there enough of this stuff to meet demand? Are we going to be able to produce enough to meet demand? Is the demand there to support prices? And what we've seen is just the whole mixture of things going on. And these markets aren't just us. It's not just the U.S. They're global markets. So when you look at the ag complex, you don't want to think in terms of United States, although we are a major piece of it, but you got to think about the rest of the world. An example is wheat. If you look at, it's not just wheat here. It's wheat in Russia. It's wheat in Ukraine, Canada, Australia, India. And China, although China is one of the largest grower of wheat in the world, they don't export it, they import it because of their consumption now. As people have gotten more capital, more money in China, we see a whole variety of changes when it comes to demand, and it's reflected in these ag markets. So volatility, I think, really came along with these markets, and I think they also surprised us a bit as well too, because as inflation goes up, you expect those markets to go up as well. And Mark, my last thought on, I guess, when it comes to ags is God bless farmers. God bless the people who are willing to take this risk. And I hope and pray that they do hedge, because it is such a high risk business, and things that you don't control can have such a huge impact on your output. It's, I'm glad there are people out there willing to do this business. I just think it's incredibly difficult.
Getting rougher every year, right? With all this climate change throwing all sorts of wrenches into the works. By the way, we have a lot of guesses coming into our chat now of what they think the dark side will be. Option God says he's guessing nat gas. Probably a good guess. I'm not going to reveal it. Probably a good guess there. Nichols says he's going for wheat. Which wheat? You didn't guess one, so you're disqualified. I'm just kidding. We'll give you both. Probably a good guess there as well. Options Queen going for palladium. That could be a good one as well. That was moving a lot this year. We also have some love for you, Dan, in the chat. Who was it? Options Queen saying Dan is the best straight up. So there you go. Yeah, some love.
Oh, it's that nice. Thank you.
By Option God saying he needs a drink straight up with these markets. Yeah, I could probably see. A little early for me, Option God. Yeah. But hey, maybe you're across the pond. We don't judge here. Whatever gets you through the day at the end of the day. All right, so let's break it down, Dan. The dark side top 10. I already gave you one of them, listeners. A class 3 milk, so we're kicking things off in dairy. Did anybody have dairy in there? I don't see any dairy guesses, so no dairy love. Off 14.04%, Dan. So again, a little bit more percentage movers to the dark side. Cost you 14% to break into our dark side versus a little over 10% to the light side last year. Number 9, keeping it in the ags. I don't see any guesses for the beans. The beans coming in at number 9, off 14.66%. And then keeping it not just in the ags, but in the beans yet again for number 8, soybean meal off 18.41%. So, Dan, no love for soybeans last year. Number 7, who was it who guessed wheat? Nichols, you got the gold star. Chicago wheat coming in at number 7, off 18.75%. Number 6, Dan, you mentioned the meats. Lean hogs coming in 19.54%. to the dark side. So a rough year for lean hogs. People don't probably think that, Dan, because they see all their prices going up at the grocery store all the time. Lean hogs were actually down.
Yeah, Mark, what's interesting, that's an excellent comment that you just made, because it's a lead lag kind of marketplace. So when you see cattle prices coming off, and it could be because, let's say, the grain prices are going up, which is what we use to feed cattle. And at some point, if you and I have cattle that we're feeding, we say, doggone it, it's costing me so much to feed them, I'm not going to get the price I need to even break even. So what do? They take that cattle and they bring it to process it earlier than they normally would. So probably a little bit less weight than they normally would, but they bring it. Now, when they do that, it's about 2 years for that cycle to get the herd in the United States back up to where it was. So there is that lead lag aspect to this marketplace. And I think I like your comment. We may not feel it in the grocery store, but it's the reality for people in that business.
Dan, we got some cheaters sneaking into the chat. They're guessing soybeans after I already said soybeans. So that doesn't count. We're not going to give them any bonus points for that. Cheaters here. Who was that? Frank. Cheating on soybeans, Dan. We got cheaters. lurking in the chat, so keep an eye on them. Number 6, lean hogs. Listen, like you said, off 19.54%. When you went and bought pork, did you think lean hogs off nearly 20% on the year? Probably not. Number 5, listeners, we keeping it in the beans, so Cheater Frank will be happy. Soybean oil off 23.55%, so just a rough year for the entire soybean complex, listeners. Number 4, still keeping it in the ags. Got a bit of a theme going here, listeners. We're going off to KC wheat now. So Chicago wheat off 18.75%. KC wheat off 26.25%. Dan, does that surprise you? There's such a disparity between the two, or is that kind of what you expected with KC wheat taking a little bit more on the chin?
Either one could have led that, actually. They're used for different things. Like durum wheat, for example, we use to make pastas and breads and things like that. We also use wheat for cattle feed, depending on where the prices are of soybean meal. Can be used for that. So that they're different products in that regard, and so their applications are a little different, even though they're under that big umbrella of wheat. And it's a fascinating market. Actually, it's truly a global market. When we think about wheat, you want to think about these other countries and how they're doing. Like right now, for example, it's mind-boggling how much wheat is out there. Russia may have a record wheat crop. Ukraine actually is doing well. If you look at, Australia is kind of iffy. Canada looks pretty good. I mean, so we have some things happening out there that says we got a lot of wheat out there. And we're here last year with the Ukraine war and everything else. We were wondering, gosh, all these countries that need wheat. Hey, okay, here's the question. What country imports the most wheat in the world?
Imports.
Mm-hmm.
Well, you're just talking about China. I'm going to guess China. They're a big consumer of a lot of these commodities these days.
Oh, that's a good one. Yeah, I would think that one too. Egypt.
Egypt, really?
Yeah.
The former breadbasket of the entire Roman Empire is now importing the most wheat?
A good way to say that too, Mark. What's interesting, do you remember the what do you call it, Arab Spring that we had a few years ago? That started with the price of bread. So if you're in Egypt, you want to make sure that people have bread. It may seem like, where does that fit in? But it really is critical. And if you look at Africa, some other parts of the world, that wheat is critical to what they do and what they consume. So it's fascinating, that complex globally.
I would not have guessed Egypt. So, Dan, you threw me a curveball there. Egypt, for time immemorial, has been the breadbasket for the rest of the Mediterranean. Apparently, no longer.
Well,
they have lost that distinction.
It surprises me, too.
All sorts of surprises here. We had someone, speaking of surprises, we had another guest coming in for, I just saw it, I don't know where it went, but I thought I saw, I lost it. Oh, soybeans, we already saw that one already. Oh, cattle. Option Screen was guessing cattle because you got her going on the meat stand, so she's guessing cattle. We'll see. Maybe that will make the top half, Dan. We'll see. Number 5, like we said, soybean oil. Number 4, KC wheat, off 26.25%. Number 3, keeping in ags. We can't get enough of ag obliteration this year, Dan. All that Ukraine premium has been lost and then some. Corn, number 3, 28.87% to the dark side. All right, here we go. Top 2, listeners. Let's see. We had guesses for Nat Gas. That's probably a good guess. Nat Gas, number 2, off exactly a third, Dan. 33.33% on the year. I'm guessing that one probably not coming as a surprise to you, Dan.
Well, because things changed. Supply, we had the ability to distribute supply. You know, in the past, when before Russia, but when the price of nat gas in Europe, for example, was 4 or 5 times higher than what we had here, people said we should take our nat gas, which we have a hell of a lot of, and send it to Europe. We didn't have export facilities to do that. So things have changed. We now have the ability to export large quantities of nat gas, and it's going globally. And number one customer is Europe. We're also seeing a change in Europe. Right now, we're not seeing that same dire of dependency on Russia for nat gas. It's evolved. Germany had no import facilities in terms of ocean side, but they do now have some ability to get product into them, lessening their dependence on Russia. So what we've seen is more of a resilient distribution system of nat gas in Europe. And it's also something we're also seeing in other parts of the world too, in Asia. But that's another market that we had high expectations for, much higher levels. And we're way down from where that expectation was. And it goes back to supply, our ability to produce nat gas, and our ability to distribute it globally was the game changer. And it looks like right now, Mark, even though we got some cold weather coming and we expect nat gas prices in our country to increase a bit, excuse me, we're not looking for dramatic changes in that regard. And you want to remember, for nat gas, we use a third of it to heat our homes, cook our food. The northeast part of the United States use a lot of heating oil. And we have electricity in some parts of our country, but that's 1/3 of our consumption. We use another a third for industrial use. So steel industry, chemical industry, they use a lot of nat gas. And then the last third, we use it to generate electricity. And that's something we expect to see high demand for in the summer when we run air conditioning, for example. You look for that. You watch nat gas because that could be going up. So, excuse me, in some ways, nat gas, to a lesser extent, but in the past, was a barometer of an economy. If the economy is getting stronger, consumption of nat gas is expected to go up. But boy, what a game changer. Again, Mark, if you and I were talking this time last year, I would not think it would be down 33% because of all those variables that we just didn't know how they're going to be solved.
Yes, that's that same mystical guest who guessed that NASDAQ would be up 50% if they had also said nat gas would be off a third. I probably would have thought they were a little bit touched. But hey, an asset that spent much of the year below $3, still off a third on the year. So intriguing stuff out there in nat gas. And then number one, listeners, we need a drum roll in here. There we go. We need a drum roll. I think we had a guess somewhere. I forgot as well. It might have been a queen guessing palladium. That is indeed our number one dark side mover for the year, Dan. Palladium off 42.2%. This is another one. It does light up our movers and shakers. It seems like every week we were talking about it on the movers and shakers every week. Unfortunately, there really is no options volume to go along with it, so we couldn't really analyze it on the show. But there it is, Dan, our number one dark side mover for the year, Palladium. Does that surprise you, sir?
Well, the thing that's interesting, yes, it does. Because if you look at how it traded over this past year, we did see some positive movement not that long ago in Palladium. Just back in the early part of December, there was a fairly strong rally, but we went from like 1250 down to about 1,000. So we had just over the last couple weeks, we've had a tremendous drop in that market, but it's been overall for the year trending lower. And when we think about palladium and platinum, we use that a lot of that consumption is in catalytic converters. So if our auto industries increasing in terms of production for gasoline engine driven vehicles, then we would expect there's steady demand for palladium and platinum. But we really didn't see that this past year. But boy, to have it down that much, I still think that is a surprise.
You know what, listeners, you know what else is always a surprise? It's your feedback. So let's get to it right now.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, everybody, a little bit of special feedback. By the way, Dan, I'm going to give you forewarning now. At the end of this segment, I am going to ask you for a prediction for where VIX will close at the end of this year. So just start mulling that over now. I didn't want to throw you a curveball right at the end of the show. I wanted to give you a little bit of prep work. But let's pay off some of our recent questions out here. Then we'll get to another question I want to pick Dan's brain out, which is our question of the week going right now. Last time we gathered here together on the show, listeners, we had a end of the year VIX prediction game. This went live at the beginning of December. We gave you 1 month, kind of an easy short-term one. We said, where will VIX close at the end of 2024? We gave you 4 choices between, right where it was when we posted it, between 12 and 16, or a little bit higher, 16 to 20, or spicy, north of 20, or boring below. Actually, no, this is our end of year. I'm sorry, this is our end of year for the end of this year. So I don't want to reveal this yet. My producer snuck that in there on me. I don't want to reveal that answer yet because I don't want to give Dan too much of a where our people are leaning. Instead, Dan, we'll do this. We'll do our question of the week that is going off right now. This is another one. It's the beginning of the year, so it's time for our annual sentiment poll. We're asking you folks right now, if you had to buy a 10% out of the money call expiring at the end of the year on just one of the following asset classes, which one would you choose? Gave you 4 choices. Volatility, so it could be your VIX or VXX, whichever flavor of vol you like. We don't judge. Or equities, could be the S&P, could be NASDAQ, whatever you like, Russell 2000. Fixed income, so again, 10-year, 30-year, wherever you like to fall on the old curve. Or crypto, could be your Bitcoins, your ETHs, your Solana. Again, we don't judge out there. So Dan, an intriguing question. We always ask it at the beginning of the year. I'm sure a lot of our listeners want to know, where are you buying your call, your 10% out of the money call? And then B, where do you think our audience is lining up?
Well, excuse me. If I think about potential Fed policy, if I think about our economy, where is it at this point? And the resiliency that we've seen in the economy and we've seen in the labor market. And I think about some of the commodities that you and I talked about and other countries. I think I'd still lean against the equity market for, even though if you look at where we are and the S&P and the NASDAQ and the Dow, Dow's been especially resilient. We're at significant levels, but they, just as a side note, they did a study years ago. And they took a chart, so imagine a chart where you have a line that starts at the bottom left corner of this paper, and it goes all the way up to the right at about a 45-degree angle, and the line stops right at the upper corner, right corner of this chart. And the question was, do you think it could go higher? And a lot of people said, well, no, I kind of don't think so. But if you took the same line, start at the lower left-hand corner, get it to about the middle of the page, and stop it there, and ask that question, do you think it could go higher? And they, I think it could. I think there's room. So the fact that we are at significant levels doesn't mean it can't go higher. So that's a hell of a long answer to your question. But I'm positive on the equity marketplace. So if I'm looking at a bullish bias, I would pick equities. And the key for me when I think about that, it doesn't matter as long as you and I have the right risk management on a trade. Right, Mark? It doesn't matter whether we're buying or selling. The issue is, how do we manage the risk? And even though these are extended markets, the idea of buying them on a personal level, and I'm still exposed to them, excuse me, I don't have a problem doing that as long as I use the appropriate risk management. So I lean on the equity complex.
Interesting. And you think our audience is leaning there as well, Dan?
I don't know. People started out so bearish this year. but you know, Mark, the thing, there's that FOMO kind of thing, you know, being afraid of missing the train. And it takes sometimes a long time before people are convinced that they now want to get into a market. Then they go, oh my God, I can't get in now because look how far it's gone. And again, it doesn't matter as long as you and I have appropriate risk management. And if I think about the way we finished, Mark, like look at, like I mentioned, the S&P, look where it's trading now. So it needed fuel to do that. And the fuel is not just institutional paper, but it's everybody else too. And it's the people who maybe don't buy the individual stock, may buy it with options, may do it with funds, mutual funds or ETFs. So I think I'd lean towards, I would say because of the performance that we've seen, I would lean towards stock for equity markets.
Well, our audience, Dan, I'm guessing some of this is just mechanical. VIX has fallen so low. It's very easy for VIX to pop 10%, right? 1.2 points. 41.7% right now are just choosing the VIX. They think a nice 10% out of the money call in VIX has a good chance of paying off. Kind of hard to argue with that over the course of the year. In terms of equities, a third of our audience agrees with you, Dan, 33.3% going the equity route again. That's been a winning trade for the last couple of years outside of 2022, so kind of hard to fault them for that. As you mentioned, too, there is momentum. Interestingly, though, Dan, all of last year, we kept doing this type of sentiment poll throughout the year, and crypto never really broke more than about 7.5%. That was about as high as it got. Right now, crypto coming in third, Dan, 16.7%. Want to load up on Bitcoin and ETH and all that fun. So obviously some recency bias there, but it's hard to argue with them. Bitcoin has been on a rampage, and so all of crypto has for the better part of the last couple of months. And then bringing up the rear, Dan, no love for fixed income, only 8.3%. So nobody's allocating to bonds right now, which is kind of interesting. By the way, our producers did pull it up. We did ask this question again exactly a year ago. We mixed up the categories a little bit a year ago. Last year, we gave them 4 choices of S&P 500, Bitcoin, WTI, or VIX. and the S&P took it with 43.3%. That turned out to be a pretty decent trade. Tied for number 2 with 2 terrible trades. People wanted WTI and VIX, Dan, and both of them with 24.4%. Both of those ended up being big losers on the year. VIX was net down a little over 10 points, I believe, and WTI obviously took a drubbing last year as well. And then the actual winning answer in real life, Dan, the one that performed the best, we just broke it down for the year, Bitcoin, up 160 odd percent, only got 7.8% of the vote, Dan. So no love for Bitcoin a year ago, and then look how that one turned out. So right now, listeners, hopefully you're playing along over there at Options in our annual sentiment poll. If you listen on the podcast, you have until the end of this week. At Options is the place to go to make your voice heard. All right, Dan, we also did kick off this year with our annual Vol Prize poll. We poll our audience, we poll all of our network guests and our regular frequent offenders, co-hosts here on the network. We make everybody guess where VIX is going to close for the end of the year. A lot of people wanted to play this year. A lot of people sending in. Our poor producers, they have thousands of VIX guesses to collate for the end of the year, Dan. But it's now your time, Dan, to add your voice to that audience before I reveal the results of our Twitter poll on this as well. So, Dan, if you had to come up with a number for where you think VIX is going to close at the end of the year, where do you think it's going to be?
Well, do we have choices?
I do have choices, and I have a poll. I can give you those if you want, and that'll maybe set you a little bit. We gave our audience, but we're looking for specific picks for this one, though, Dan, specific number. But we did give our audience a range as well. We gave them 4 choices. We said right about where it was when we posted this poll, so between 12 and 16, or higher, between 16 and 20, or spicy, as you put it, Dan, north of 20, or boring, below 12. I won't reveal which one won, but those are our ranges. So that said, you can feel free you can pick within those range. You can go crazy. You want to say 48? No one's going to judge you. Maybe some people in our chat will judge you, but I won't judge you, Dan. So,
I guess here's the thing, Mark. If to be consistent, if what I was contemplating, that the equity side could have a pretty good year, possibly, then we look for that VIX to be on the low side.
Yeah, that's a conundrum, right? You're looking at a 9-handle VIX now if your prediction comes to pass.
So I would say, yeah, it's right. It's around there now. I would say less than 12.
Below 12. So I'll give you, wanted to say a 12 handle, you want to say below 12 for your specific picks, or what are you feeling? 11.55, something like that?
Specific. Yeah.
I'll put words in your mouth.
Done. 11.55.
Okay. I guess I did put words in your mouth. All right, Dan. Dan's coming in at 11.55. So you're looking for a boring end to the election year. Remember, it is an election year, so that there will be some vol. Whether that vol persists throughout the end of the year is the big question. All right, Dan, now I'll reveal the results. Again, well over thousands of people voting on this one. It was kind of fun to see the disparate opinions. Of course, all the people. One guy picked 300 for his specific VIX pick.
Whoa.
I don't think that guy knows quite how VIX works, but hey, we opened the door to all comers out there. But for our actual poll, Dan, 16 to 20, so higher, ended up taking it. 35.9%. So a little bit of elevated vol towards the end of the year. So I'm guessing some of that election vol they're guessing is going to persist past November. So where we were at the end of the year, we closed right around 12.45, Dan. So people picked that range, number 2, 29.5%, choosing the 12 to 16 range. Boring. So going along with you, Dan, below 12, 19.6% for number 3. And then folks going for the spicy meatball north of 20, 15.1%. So quite the range of responses. That poll is closed now, listeners, but you know what? We're nice to you folks. So if you didn't get a chance to submit your specific VIX pick and you want to be like Dan, you want to put your name in the hat to win the 2024 Vol Prize. No one won last year, Dan. No one got with even half a point.
Really?
So, yeah, it was a hard one. We had a huge range. We had a 19-point range on the year, so people had a hard time last year. But we'll see, listeners. Maybe this is the year someone takes home the prize. So if you want to join Dan, get your specific picks in. You can send them in questions at theoptioninsider.com. You can also reply or DM to that poll. We still have it pinned over there on Twitter. We'll take them through the end of this week so you folks can play along on the podcast as well. Maybe you want to echo Dan. Maybe you're feeling 11:55. All right.
It was scientifically gotten.
Scientifically produced. Yes, I may have put those words in your mouth. That means a boring end to the year, Dan, which is not great for us. But hey, might be good for some equity folks out there.
Well, but hey, wait, Mark. If you want to sell some premium,
that is true.
Right?
That is true. I just know from a content producing perspective, a sub 12 VIX isn't exactly conducive to a lot of hot action.
Well, that's a good point. That's a good point.
We need some hot vol to talk about here on the network. So listeners, get your guesses in now before the end of the week. All right, Mr. Dan, that is going to do it for this kind of special kickoff for the new year. Looking back last year, also looking ahead a little bit. Speaking of looking ahead, before we go, Mr. Dan, if there's anything else you want to leave our audience with in terms of maybe areas of the market or products or just specific trends you're keeping an eye on for the rest of this year, 2024, have at it, sir. The floor is yours.
Well, I think the one thing that I can't wait to see what happens, and you brought it up, Mark, and that is it's an election year. And how is the market going to perceive what happens in the presidential election? And, we've seen a lot of people think it should be all Republican, then we get things done, or it should be all Democratic. And if it's all Republican, though, it'll be better for the market. If you look at it statistically, when we have a split between Republican and Democratic, it actually ends up producing some pretty good stock market results. So that's going to be interesting. But I think the key it is the presidential election because it's going to create perception again. But the other part of that is the Fed. The Fed really directs our economy. They're the ones that determine how much money is available. Do they squeeze it tighter? Do they expand it again? So that's the area that we want to watch. That hopefully we do have a soft landing, that it maintains what we're seeing right now, the resiliency in our economy, our labor market, and with the Fed keeping a steady hand but not being too aggressive. I think that's really the key thing for this year as we explore these next few months in the markets.
Just when we thought we were all done with the Fed, Dan, they keep pulling us back in. We're like, I'm
sorry, Mark, there's one thing I do want to say, and what you said earlier, and that was when you said interest rates were like at 8%, I think, in the poll. That makes sense. And the equity market was high. Because people, when you think about it, excuse me, when people have money, they say, if I'm willing to take risk, I put it in the stock market. If I'm not willing, so it's a risk-on trade. If I'm not willing to do it and it's a risk-off trade, one of the places it goes is interest rate markets. So I love what you do because you really give us a barometer of the attitude that people have, and that's what drives the market.
Well, we appreciate that, sir. Right back at you. And if folks want to check out some more of your content, maybe some more of your musings on these crazy markets for 2024, where should they go? What should they do?
Well, they could go to dangramza.com. I do a daily video, covers 22 different markets, 6 different sectors, so stock indexes, currencies, interest rate, metals, energy, ags. And it's a free video. It's done, like I say, every day the market's open, that video's there. And if you want, you can sign up for an email. Excuse me. And when the video is posted, you get an email that says the video is posted, so that you can see it if you want, to give you an idea. And so it's done every day before the next day to talk about what the expectations are for the next day. And it's all on futures. So if you've never traded futures, it may be a place to start is just watch them. See how they unfold. You can also go back 10 years worth of videos. So you could go back and say, okay, what did Dan say when this happened? And you're also going to see red and green lines that are going to move. And green represent the buy level, red represents the sell level. These are not buy and sell recommendations, just sharing ideas that I'm seeing as these markets unfold. So that may be a spot to see if hopefully there's some helpful information as people formulate their ideas.
There you go. Check them out for yourselves, listeners. Dan Gramza, GRAMZA.com. And of course, you know where to go to check out all the TWIFO reports that we didn't get into this week, but we'll be back on the show next week. CMEgroup.com/TWIFO. TWIFO is the place to go to kick the tires and light the fires. That's going to do it for us here from the Southern Studio. Back again tomorrow, noon Central, 1 p.m. Eastern, to break down the mad week and indeed look back a little bit on the mad year in volatility on Vol Views. Our buddy, the once and future Dr. Vix, Mr. Rhodes, will be joining us there. So all sorts of fun in store there. And after that, exclusively for you pro folks, we're coming back for a little bit of the old options oddities to kick off the new year with some weird and wild trades. Then we're back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.